Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us remotely, we have Ethan Chernofsky. He's the vice president of marketing at Placer.ai. And there's actually a bright spot with the coronavirus pandemic, and it's the QSR sector. Ethan, it's great to have you with us. Thanks so much for making the time to join us. And QSR, explain to us what that is and how the sector is holding up.
So thanks so much for having me. I think one of the things that was really interesting for us was when we looked at the fast food sector, we saw that traffic was actually increasing both in that late February period, but then also into early March, which told us a few really interesting things. One, this is one of those sectors that has a unique potential because of how it's oriented, because it's very fast, because it's low cost and high in value, to actually do well during a period where there is a great degree of concern in the wider consumer market.
Mm-hmm. And we can see that in the first chart here. Some of the numbers are actually quite impressive.
Yeah, absolutely. I think we're seeing growth for a lot of these companies. And what's especially impressive is, again, it's happening in a period where we saw declines in almost every other sector. So it's not just that these brands are performing well, but they're performing well in a period where the rest of the landscape was already starting to feel the impact of the coronavirus.
All right, and if we move along to our second chart here, this is QSR traffic during the coronavirus, and we can see that change from the last week of February going into the first week of March. The numbers really aren't that much different.
So what's interesting is that you would expect there to be these massive declines again as concerns around the coronavirus spread throughout the country. So it was essentially very isolated in the beginning. And instead, we saw quite the opposite, that it actually maintains, if not grows, for some of these brands. And that's a hugely impressive testament to the types of relationships that these brands have built with their customers, but even more in the way that they're able to serve customers during these periods.
All right, if we move along to our third chart here, we're taking a look at the week over week change from late February to early March. Starbucks really stands out to me. I'm wondering why the coffee category remains so strong.
I think it's the same as the wider value chain that is being provided by these fast food restaurants. If you think about what's happening, people are concerned about leaving their homes. So you're going to see a dip for companies that are focused on sit-down dining. But the idea that whether it's a cup of coffee or a hamburger or a chicken sandwich, I can walk into a restaurant, be in and out fairly quickly, and then still have that, that fix accounted for is very fulfilling, especially during a period where that visit outside becomes something that I'm taking far more seriously because of social distancing.
And which is interesting, you can see it in the numbers as well, because while the fast food chains were on the incline, restaurants are actually going to sit, like a TGI Fridays, like a Perkins, for example. You can see that significant drop off from the last week in February to the first week of March. And that's my next question to you, Ethan. Clearly, with social distancing being forced to be put in place and a lot of these chains have had to close, what do you think the near and long-term impact is going to look like?
So I think it's going to still be fairly strong for the QSR sector in this period. And let's differentiate between those sit-down restaurants and the fast food chains, because the fast food chains have a robust delivery ecosystem that's already well developed that allows someone to order and for them to take advantage of the fact that even though people are at home, they're still going to be looking for a meal, and one that's at a fairly good cost. The idea that I've been in my house all week and my kids are home and I'm trying to work from home, ordering out for a hamburger or for dinner can be something that provides a little pickup in the middle of the week. And because of that setup that they have around delivery, it's a sector that's incredibly well positioned. I think what you want to see on that sit down restaurant mentality when you're looking at those chains is, how do they adapt? Can they create a takeaway menu? Can they build out some sort of delivery strategy to take advantage of the assets they have in a period where you're going to see continued declines to the restaurants themselves?
Yeah, that's an excellent point. And I want to move on to our fourth chart here and the supermarkets. I mean, anecdotally, supermarkets have been, it seems like where everyone on the planet has been congregating lately. What are you seeing there?
So it was actually fairly interesting because our expectation was we were going to see a massive increase in traffic in late February and in early March, on par with what we saw for wholesalers like Costco or Sam's Club or BJ's. But it wasn't it wasn't the case. In fact, for many of the brands we looked at, they saw declines in traffic in the last week of February 2020 compared to the same week in 2019. And even in that first week of March, though it started trending in the right way, it still wasn't the massive amount of outpouring that we had expected, though that all changed in that second week of March, when you saw massive gains for almost every grocery chain that we looked at across the country, led by 40% growth for Albertsons, 36% growth for Kroger. And across the board, there is a clear trend happening where we still see grocery as a necessity. We're willing to leave the house to do it. And in fact, we might see audiences actually view this as a chance to get out of the house and do something while still practicing social distancing.
All right, now let's wrap it up here. What are you seeing with the big box stores? These are your Targets, your Walmarts.
Absolutely. I think there are a few brands that were better positioned to be a resource for customers during a period like this, because what Target and Walmart essentially offer is the ability to accomplish a tremendous amount with a single visit. So very often these locations have a large grocery section. I can pick up food for the family. I can get a couple of things that I need on the apparel side. I can buy a toy for the kids that are home, or an arts and crafts project to keep them busy. And that ability to accomplish so much with a single visit takes brands that were already performing well and positions them to perform even better, even during a period where there's a wide degree of challenge facing the retail sector.
All right, Ethan, appreciate the insight. I'm sure we'll be checking in with you quite frequently over the next couple of weeks.
Thank you so much for having me. It was
great. You got
it.
And thank you for joining me on Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.